BLS International. So I just
Okay.
wanted to ask about the short-term
Short-term
target.
view. And when did you buy it exactly?
Yes, sir. Last week.
Last week, because I can see the stock was down significantly, over 6% today, and you have bought at 480 and currently it's trading at 469 levels, and you're sitting on a loss of almost 2,000 there in just 1 week. So Vikas, coming straight to you on this, how is BLS faring on the charts?
Well, the stock has just declined from its 52-week high for 510, 515. So he has almost bought near to the peaks. Some double top has been emerged at 515 to 520 levels. So we were advised to maintain some strict stop loss at the current area. Because if you look at when the structure turns weak, the sell-off would also be equally sharp. So I would advise to trail a stop off near to 443, 445 is the band of averages. If that has been breached out, then we should expect further decline. And on the higher side, 510 to 515 again would be a strong resistance point.
Thanks for that view, Vikas. Let me go across to our next caller as well. We're getting a call from Venkatesh from Chennai. Venkatesh, what's your query and which particular stock are you looking for right now? So I think we've just lost the caller, but we'll take across the query to the guest. He holds roughly, I think, about some shares of Zomato at roughly about 268 rupees per share. Let me go across to Mahesh, because we did see that the company came out with its, Q3 earnings today as well. Any kind of outlook do you have, Mahesh, on the stock?
Definitely, the result has posted some weak number and commentary of the management is also weak. Further, stock has a potential of upside, but current commentary is weak. So we can see some consolidation between 200 to 210 zone. So from shorter term period, he can exit and re-enter at lower level. Further, from 1 year horizon, we can see 280 to 295 range further. So from shorter term period, we can see some consolidation, lower consolidation zone, and after that, we can see further their quarter results, so we can decide further. From 1 year horizon, still we are positive to 280 to 295 zone.
Okay, so that's a view coming in on Zomato. Now let's go across to one more caller from Vizag. Hi, Sai Kumar. How can we help you?
Good evening.
Good evening. Please go ahead with your query.
My query about ITC.
Okay.
I have 100 shares of ITC.
Right.
And the average price of 289.
Right. And now,
so it is taken out.
Yeah, and when did you buy it?
Yeah, it is almost 4 years ago.
4 years ago, because I can see that you're sitting on a profit of almost 15,000 there. Currently, the stock is trading at 437. You bought it at 289. And Nuvama also came up with a brokerage note on ITC. So it said that you can retain buy with the target price of 571. So, Sai, are you looking for a long-term view or a short-term view on ITC?
That's
Are you looking for a long-term view? Sai, are you looking to hold the stock for a longer period of time or a short term?
No, next coming 6 months and
6 months picture. All right. So I'd like both the technical and fundamental view on it. Coming to you, Vikas, what do you have to say on ITC?
If you look at some major corporate action has taken place in the last month, the ITC hotel shares would be received by the investor. So the stock has witnessed some amount of corporate action, due to which the stock 25-30 rupees, which was the value in the terms of ITC hotels, has been declined. So we believe once the ITC hotels has been listed, and we would see some amount of traction with the hotel business coming through. In terms of ITC, it is at multi-month support area. So 410, 420 is a strong support area from where we have witnessed strong amount of accumulation. So it should continue to hold on. We believe once the ITC hotels has been listed, it would again regain its story to 475 to 480.
Right. And Mahesh, for the long term, how are the fundamentals of ITC looking like?
Definitely, in a particular space, the ITC is a lower P in compared to other peer, other peer. So I think ITC can be accumulated from here also, and if anyone want to accumulate, then he can accumulate also. 1 year horizon 550 to 560 range could come, and further we can see in budget, if any taxation part on cigarette not came, then we can see some more upside. And from 6 month horizon, we can see 480 to 500 range immediately if in anything not negative came in budget. So my optimistic is more positive side on ITC. So 1 year horizon, 550 level could come.
Got the view, Mahesh, but we're also getting a next query on a caller as well. Ravi is calling up from Andhra Pradesh. Ravi, if you can hear me, what's your query?
Yeah, I'm thinking to invest in Bharat Bijli stock. Is this the right one?
And what's your current time horizon? Would it be a long-term or a short-term view that you're looking for the stock?
Yeah, two to 3 years. I am thinking.
2 to 3 years. Okay, let me go across, to Mahesh. Mahesh, do you cover this particular stock, Bharat Bijli, and any kind of outlook that you have on the same?
Not in particular capturing that stocks, but we can analyze some, share some thoughts also. So we can, investors should keep an stop loss near 2890 or 2850 level, and upside could be in 1 year horizon 3800 to 3900 odd level. But I think much more other attractive stocks are available compared to Bharat Bijli. So investor can look on that part also. In defense sector, HL is more promising from other space, and I think more upside could come in that level. So if an investor is looking for a further a different type of investment, then HL can be preferred from here also. For Bharat Bijli specific, 3850 to 3900 level could come with the stop loss. Need to keep near 2850 level.
Vikas, let me just quickly ask your view also, because the last 6 months, the stock has been down around 23%, but the last year has been good for the company, but it's seen some correction in the last 6 months. Any kind of view that you have on the same?
The whole PSU basket has witnessed correction over the last 6 months. The same simultaneously went into through for Bharat Bijli. It is forming some amount of formation base area near to those 3300, 3400 levels. So 3300 is a good 20-month average to hold on. So we believe some bounce back cannot be ruled out from current levels, as we have witnessed good amount of move into the other PSU names. So the stock could move higher near to those 3850 to 3900 levels. And if some budget news flow comes in positive, then it would move further.
So view coming in on Bharat Bijli. Now we're getting a caller from Delhi. Hi Gaurav, how can we help you?
Yeah, ma'am. I have a Reliance share for 1120.
Okay.
I just want to know that should I hold it or should I sell it?
And when did you buy it exactly?
Year or two back.
Okay, and you're looking for a longer term?
Yeah, longer term, ma'am.
Okay, because Reliance just came up with its Q3 earnings. The profit was up 13.5%. Revenue was also up 4%. EBITDA was at 43,789 crore versus margin at 18.2%. So Mahesh, coming straight to you, is it advisable to hold RIL for a longer term?
Definitely, he can hold because already lower consolidation zone completed in the Reliance. I think much more upside potential of Reliance from 1 year horizon. It could be 1400 to 1500 level. But immediate, if anyone looking for immediate 6 month horizon, then 1420 to 1440 level could come in near term in 6 month horizon. But longer term view, intact 1 year view, we can see 1500 odd level in Reliance easily.
We're also getting a next query coming in from Amit, who's calling us from Hyderabad. Amit, what's your query?
Hi, good evening.
Good evening, Amit. What's your query and which stock are you looking for an outlook for?
Yeah, I am looking for the stock known as Sagility. Actually, I wanted to ask, can I add this stock as the rupee is depreciating and their business is completely to US, right? So their income is about to go up. And I'm holding about 1200 shares at 45 rupees each.
Well, that's a great query, Amit, because it's a recent listing as well. It's done very well for us investors. Amit, just before I go to the guest, what's your current time horizon that you're looking to hold? Any kind of additional shares that you might buy?
My time horizon is at least up to 10 years.
Okay, it's a long view that you're looking for this particular stock. Mahesh, let me go across to you. Sagility, very recent listing, has done very well for its investors as well. Any kind of outlook that you have, especially anything that you can add in terms of rupee depreciation as well? One of the biggest beneficiaries are export-oriented companies. Any outlook that you have for Sagility currently?
Definitely, you can add further from these level. 1 year outlook could be very positive from here onwards. So what's their client base in the US, and their major client base is from US healthcare technical clients. So I think more revenue could come in from US also, because Trump joining, and we have what we are seeing is Trump is policy. So it that Trump policy could be more beneficial for stocks that also. So from longer term perspective, we are optimistic for much more upside. If anyone looking for 1 year horizon, minimum 85 to 90 level could come. Last quarter result have posted, company has posted last quarter result superb, and commentary of management is also very good. So from the current from upcoming 1 to 2 quarter, we are seeing much more upside in Sagility. So currently stock is consolidating, and because the stock is trading in T to T, so some consolidation are visible in the stocks. But from longer term horizon, definitely he can add further, and much more upside could come in this stock.
Right, so for long term, you can add on Sagility India. That's the view coming in by Mahesh. Now let's go across to one more caller from Bengaluru. Zenith is calling. Zenith is a very regular caller on our show. Hi, Zenith. Good evening.
Hello. Good evening, everybody.
Please,
thank you for accommodating me every single time.
No, it's our pleasure. Thanks for calling us, on a day-to-day basis. Now, what's your query for today, Zenith?
Okay, I'm holding 200 shares of CDSL.
Okay.
And at the price of 1,761 rupees.
Right.
And it's almost 10% down.
Yeah.
My query specifically would be so is it true that when these kind of stocks rallied up within a year, so much so, so it will go under consolidation phase for a year or maybe more? And how's the outlook looks like in next 3 to 6 months? And also, since there's Q3 results are upcoming on January 25th.
Yes.
Do we have any preview? Will it be, are we expecting a positive note on it, or?
Okay, because yes, I can rightly see that you're sitting on a profit of almost 33,000 there. Mahesh, I'd like to come to you on this because the stock has fallen over 14.34% in just 1 month. So, should Zenith stay invested in CDSL for another 6 to 8 months?
From 6 to 8 months, we can see some more consolidation in the stocks. If his horizon is more than 12 months, he can hold for because what we are seeing is marketing, seeing some profit booking and consolidation zone. So all the stocks are facing some selling pressure, and further their margin are some consolidation margin also. So from result perspective, we are not much more optimistic from 1 to 2 quarter. So further, if anyone horizon is more than 12 to 18 months, then he can hold further. We can see much more upside from the recent high also. But from 1 to 2 quarter, I'm not much more optimistic. From 1 to 2 quarter, he can book in exit in a higher level. That could be say 1,650 to 1,700 odd level. So from shorter term, exit from my side.
Okay, so that's a sell on short term, but I'm sorry, he is sitting on a loss of 3,000 there. By mistake, I said profit. Vikas, what do you have to say on CDSL for short term?
Well, the stock is at the support area. No doubt it has witnessed good amount of 15-17% correction, but it has been the new entry into the F&O basket in December. So it is witnessing some amount of unwinding from those few long-term holders in terms of selling it as an arbitrage, but it is at near to support area, so should witness some amount of strong positive up move. So on the higher side, 1740, 1750 should be easily tested if the market continues the move near to those 23,800 to 23,900 levels.
Okay.
Got that view, Vikas. We're getting a next caller from Mysore. Chandan is calling us with a stock query. Chandan, what's your query?
Hello, sir. Good evening, sir. Sir, my query is I bought Sterling and Wilson Renewable Energy 6 months before at a price of 618, quantity 150. But today it is trading at 385 levels. Last week it has received order of 2,500 crores from Gujarat government. That day it has touched upper circuit of 10%. From the next day itself, it is moving in a downward trend. So is there any chance that it will bounce back so that I can exit in near future?
So you want to exit in the near future? Okay, I'll just get that query. Okay. So Sterling and Wilson, let me get both a technical and a fundamental view. Vikas, The counter has been very volatile. Any kind of outlook that you have on Sterling and Wilson, and if not this particular stock, do you recommend getting out of the stock and getting into any other renewable player at this point of time?
So in the near future, as the client queries, investor queries, so we believe it will take time to recoup its losses because it has seen a vertical fall and post-result reactions. Also, the stock went lower circuit. So we believe it's some more time pain has to be correction. Maybe price-wise, the stock would have finished its correction, but some time correction and consolidation cannot be ruled out. So the investor will have to wait for another 6 to 9 months to recoup on the higher side into those 455 to 480 odd levels.
Mahesh, any kind of fundamental view on this particular stock? We have seen, the company's Q3 results also come very recently. While the profits have grown quite decently, it's on a low base of just about 7 crores. Any outlook on Sterling and Wilson at the moment?
Definitely, company has posted good numbers, but what we are seeing is that management is not much more optimistic for further quarters. So stock was beaten down. So I think much more some more already priced in. Don't see think much more downside from here onward. I think 360 to 385 could be consolidated. Stock could consolidate in these level. From 1 year horizon, we are optimistic for 500 to 540 level. So if investor horizon is 1 year, then he can hold further.
Okay, so that's the view coming in on Sterling and Wilson. Now we're getting a caller from Delhi. Hi, Prabhash.
Hello, good evening, everyone.
Good evening. How is Delhi's weather treating you?
Yeah, it's a little cold and up and down and with a little bit of pollution.
Yeah.
It's okay.
So please go ahead with your
on.
query. Yeah.
Yeah, thank you so much. Yeah, I have a query regarding my investment in SAIL stock, Steel Authority of India. I hold like 1,050 units purchased at 128. Actually, I've been averaging down from an earlier price of 155.
Okay.
And I'm willing to hold the stock for around a year, but I'd like to understand if there's any scope for growth or recovery in this time frame.
Yeah.
Could you please share your expert advice on the prospect of SAIL and whether holding on would be beneficial or so?
Of course.
So, would it be futile?
Yes, I'll directly go across to my expert on the fundamentals there. Mahesh, the stock was down over 23% in the last 6 months is what I can see. Prabhash had bought it at 128. Currently, it's trading at 109. Do you see the stock reaching those levels in the near 6 month or 1 year down the line?
Definitely, stock has potential to go upside up to 140 to 150 odd level. But what is we are seeing Trump in joining his office, and we from China onwards, what is their impact and their policy could come in on tariff level. So that should be watchable from that perspective. Any investor should keep stop loss near 94 to 90 level zone level. So 1 year perspective still is hold, and we can see 140 to 150 level, but keep strict loss near 90s.
Got that view, Mahesh. Let me go across to our next caller from New Delhi as well. Chandan has a query. Chandan, if you can hear me, what's your query?
Hi, good evening.
Good evening.
My query is regarding Prakash Industries Limited. I am having 6,000 quantity at average price of 168. And this stock has made high of around 240 just few months back. And during this recent correction, it has come down to 145, so around 30% correction. And now again it has reversed, and during the last 1 week, it has gained around 17%, and today it closed around 174.
And what's the kind of outlook that you have? Is it for the short term or the long term?
3 months max.
3 months. Okay, let me go across to Vikas very quickly on Prakash Industries, a small cap stock, 3,000 crores of market cap. What are the charts suggesting to you, Vikas, on Prakash Industries?
Well, this stock, what he suggested, the whole pattern as it's described, from 235 to 40, it witnesses good corrective action here to 140 levels. So we believe the price correction is over. Now it's on version of the breakout. It was band of averages near to those 178 to 181 odd indicates. The stock has witnessed good amount of price and volume both action on the positive side. So if 182, 183 is being crossed, then we could expect a further up move to 205 to 210 levels. So we can continue to hold on. If we want, we can keep a trailing stop of around 163 from current levels. Otherwise, the potential target could be 205 to 210.
All right, so that's a hold view coming in on Prakash Industries by Vikas. Now we have a caller from Hyderabad. Hi, Prabhakar.
Yeah, hi.
Good evening. How can we help you?
See, in the recent time, I have purchased NetWeb Technologies at an average price of 2773. The quantity is 1000.
Okay.
Actually, I have seen there is a sequential growth in the sales and net profit, everything. And yesterday also the result came. When the result came, that means that there is a increase of 31% in the sales and 16% in the PAT and EBT. Even though there is a sequential increase in the sales, I am seeing today that means there is a 10% drop in the price.
Yes.
So what exactly happening? The thing is, I am having a view of long term.
Okay. Because I can see that you're sitting on a loss of almost 6 lakh rupees there, and the stock was down over 6% today itself. And if I talk about last 1 month picture, so it has been down over 20%. Vikas, coming straight to you on this, is it advisable for our caller Prabhakar to stay invested in NetWeb Technologies, because he is sitting on a very big loss there?
I would recommend to avoid to invest further, because if you look at the stock has almost multiplied by 3x over the last 2.5 years. From a base of around 1100 odd levels to it has made a high near to those 3300 odd. So maybe probably the timing in which he invested was near to those 52-week highs. The volume and price pattern suggest there would be some further corrective action, because it has witnessed a strong breakdown from its 200-day average with sharp volumes. So we believe it's better to avoid. If the stock exits, some amount of consolidation or bounce back comes near to those 2350, 2400, that would be an ideal price to exit the stock.
All right. And Mahesh, do you also hold the same view on NetWeb Technologies for the longer term?
Definitely, stock was trading at a much high P, so profit booking was came in the stocks, and further all the stocks are facing corrective mode. So I think a stock can consolidate further, and similar view to Vikas is that he can exit in further any high.
Got that view, Mahesh. We're getting a next call from Bangalore. Vishwas is calling us. Vishwas, what is your query?
Hi, sir. Good evening, sir.
Good evening.
Sir, Varun Beverages 200 stock, average price 600. Older buy, sir, short term, sir, 6 months.
Okay, short term view on Varun Beverages. Let me go across to Vikas on this. Vikas, Varun Beverages, while a high PE stock has seen some correction, any kind of view that you have on Varun Beverages currently?
Yeah, you can continue to hold on. The stock has been a consistent wealth creator. No doubt, immediate basis, we have witnessed huge corrective action from the highs of 675, 670 to 570. So the stock is completely oversold. So we believe some bounce back from the current levels should not be ruled out, because it is almost near to its last quarter 52-week lows of those when the stock went for a stock split. So we believe the stock can equally bounce near to those 610 to 620. And as it has been a new entry into the F&O segment, so some amount of volatility has been increased into the stock, but we can hold on at current levels for 610 to 620 odd.
Okay, so that's a whole view coming in on Varun Beverages for short term. Now we're getting a caller from UP. Hi, Shyam. Thanks for calling NDTV Profit. How can we help you?
Madam, position Imiko Elecon, madam. Imiko Elecon. It's a mining company. They are doing that coal mining.
Yeah.
Underground mining company, underground coal extraction in the company, that is.
Yes.
Yeah, I've been holding that 250 shares at the price of 2,950.
Right.
But it is on the loss, madam. Should I hold or exit?
Are you looking for a longer term picture?
Yeah, I'm long-term interested, madam, and fundamental view only.
Okay, so Mahesh, as I can see that Shyam is sitting on a loss of over 2 lakh rupees there currently, because the stock is trading at 2080 levels. And if I talk about last 1 month, it was down over 5%. What do you have to say? Should he stay invested in IMCO for, let's say, 1 year?
Stock is not in our watch list, so I couldn't comment more on the stock my side. But he can keep stop loss near 1840 and further upside. Any upside to 2400 to 2450 could be any upside for exit zone. So not much more from my side.
And Vikas, do you have to add on to it?
Just a minute.
Yeah.
Well, the stock has witnessed good corrective action. So along with the line, the whole mid cap and the small caps where we have witnessed. But it is being crossing in the short-term band of averages. So some bounce back cannot be ruled out. But I would stick the view with Mahesh that he should keep a trailing stop on the downside near to those 1850, 1800 odd levels. Because if that is being breached, then we could see further decline.
Got that view, Vikas. We are getting a next caller from Amchi Mumbai itself. Dinesh is calling us. Dinesh, what's your query?
Yeah, good evening, sir.
Good evening, Dinesh. Go ahead with your query.
Yeah, my inquiry about GA Entertainment.
Okay. And how many
I
shares
have
do you hold?
brought 9,000 shares at the rate of 123.75.
And what's your view? Is it a short-term or long-term view that you want to hold for the stock?
I can wait. If I get the profit, no, then I can wait.
Okay.
Whatever time.
Let me actually go across to Mahesh on this. Mahesh, Z Entertainment has been in the news not for the good reasons. Failed merger with Sony as well. That's been, hampering on the stock. Any kind of outlook that you have on Z Entertainment?
You see, stock is already corrected from higher levels, so not seeing much downside from these levels. So I can think if anyone horizon in more than 1 year, he can hold further. From any upside level, 138 to 145 range could be for profit booking range. And above 140 50 range, one stock can see 165 to 170 odd level. From current perspective, he can hold further.
Vikas, would you concur with the view? It's seen a lot of price correction in the last 1 year. Would you concur with this view of, staying invested at this point of time?
Yeah, I would agree with Mahesh because if you look at the stock has already been declined by 50% from its recent top, but it is making some formidable bottom-up formation into those 115 to 120 levels. So it's at multi-year low. Some announcement related to the results which are due in the current week. If something comes through, then we could witness some amount of strong traction. So it would continue to remain invested. We believe first the band of this 135 to 115 band has been there, which has been consolidating. A breakout above clear 135 to witness the stock to move to 165 to 170 levels.
All right, so that's a whole view coming in on Z Entertainment for short term. Now we're getting a caller from Kerala. Hi, Kanan. Good evening.
Yeah, thank you.
Yes, please go ahead with your query.
Yeah, my query is regarding IRCTC. So I'm holding 43 shares at an average price of 675.
Right.
So I was confused if I should book my profit and enter another stock as many stocks are in a correction phase, or should I hold it for 1 more year? And can I expect better returns in IRCTC if I hold for 1 more year?
Of course, I'll get you the view on it because the stock was also up almost 2% today. Currently, it's trading at 790, and there's a lot being expected from the railway sector, from this upcoming budget. So, Mahesh, coming straight to you on this, how are the fundamentals of IRCTC looking like?
No, fundamentally, stock is very good, but what you are seeing is the stock is consolidating in a narrow range. So, not seeing much more upside from 1 year perspective in stocks. I think 880 to 900 level could come in 1 year horizon timeline. So, from current perspective, he can hold further. But if you want to switch the stocks, then RVN could be better if any downside coming in RVNL.
Okay, so you are suggesting a sell currently?
No, I'm not suggesting to sell at these levels. I'm suggesting to sell on higher level because the stock is consolidating and today is given some small breakout. So on a higher side, he can exit and from other type of stocks, if you want to add, then RVN could be better pick in any downside.
Got that view, Mahesh. We're getting a next caller from Bangalore. Venkateshwar is, connecting to us with a stock query. Venkateshwar, Please go ahead with the query.
Good evening, sir.
Good evening.
Sir. Sir, I'm having 300 shares of Keltron Technologies. Sir.
Got that.
I purchased recently at the rate of 152, sir.
And is it a long-term view on the stock that you want?
Long-term view, I want to keep it for a long-term view, sir. What my question is whether I can accumulate it at this level, because today it has gone up to 164 rupees, sir.
Yeah.
Okay. Shall I hold it for a long term? Shall I accumulate? I want to know, sir.
Got that view. Mahesh, any kind of outlook that you have on this stock? It's a small cap stock, so roughly 1600 crores in market cap. But it's maintaining its profit margins over the last 2 to 3 years. Would you advise, do you have any kind of outlook on this stock?
Definitely, if any investor want to add on these levels, they can add further. But what we are seeing is it's a small market cap stock. Then volatility could be there. So any 5 to 6% is normal in these type of stocks. So he can add further. From 1 year horizon, the stock could touch 220 to 230 level, odd level. But in lower side, if any selling pressure could come, then we can see 145, 150 zone. Then that could be a good level for entry for new investors.
Okay, so that's the view coming in by Mahesh. Now we're getting a caller from Pune. Hi, Tejaswini.
Good evening.
Good evening. Please go ahead with your query.
Actually, I'm holding the stock Vedanta from last 1 year.
Okay.
I have purchased at 328, 70 shares.
You purchased at 320?
328.
328, all right.
Yes. And 70 shares I'm holding. Actually, twice it has reached to 520. So what should be the target? Till where should I wait for this?
Okay, and are you looking for a short-term view?
No, long-term only.
Long-term view. Mahesh, coming straight to you, how are the fundamentals of Vedanta looking like? Should Tejaswini stay invested for another 1 year?
She can stay invested because the stock is fundamentally good and demerger is on the card. So stocks could come give some more upside in the demerger type of scenario. So from current perspective, hold from my side.
Okay.
Got the view, Mahesh. The next query that we're getting is from Bangalore. Kumaran is dialing into us. Kumaran, what's your stock query? Hi, Kumaran, can you hear us? I think we can't get to the caller, but I think I'll just take his query across. He's looking for outlook on IDFC First Bank, holding a sizable amount of shares at 75 rupees per share, seen some correction there. And I think he has a 1 year outlook on the stock. Let me go across to both Mahesh and Vikas on this. Mahesh, let me come to you first. These smaller banks have seen a lot of correction because of asset quality issues that we've seen over the last 2 to 3 quarters. Any kind of view that you have on IDFC as well as the smaller private banks as a whole?
His price is 75 odd level. That level could become in near term. I think stock could see some upside. From current perspective, he can hold and stock IDFC First fundamental is good, but already priced in all the things. So from my perspective, he can hold. His price could come in near term.
Okay, Vikas, any kind of outlook that you have on this mid-tier private banks and especially IDFC as well?
We can continue to hold on. No doubt the stock was been a lot of promissory events, but it would continue to deliver. The merger process which was been hanging around has also been completed. Now the stock is witnessing some amount of traction from the lower part of the range. So good support area near to those 58, 59 band from where it has witnessed some amount of bounce back. And if some totally result updates, some surprise pair, the stock would again regain its glory near to those 73, 75. So we can continue to hold on at current levels. And if he wishes to add, he can add further with a stop of around 58.
Okay, so that's a whole view coming in on IDFC First, and the viewer can also add on at these levels is what Vikas is suggesting. Now let's go across to one more caller from Mysore. Raghunandan is calling. Hi Raghunandan, good evening.
Good evening, madam.
Good evening.
Madam, I bought today HCL Technology.
Yeah.
That is there. Can it increase or decrease, madam?
So are you looking for a long-term view on HCL Tech?
Yes, madam.
For how long are you planning to hold the stock?
And 2 years, madam.
2 years. Okay. Mahesh, coming straight to you, how are the fundamentals of HCL Tech looking like?
Fundamental of HCL Tech is very good, but stock is corrected from 2000 level to 1740 odd level. So stock is consolidated already, and from number perspective and guidance perspective, some management has given some highlights. So after that, what stock seen some selling pressure. From 1 year horizon, stock could touch to 2100 to 2150 odd level. But in this space, TCS could be a better pick than any other because TCS posted good number, good dividend, and also guidance are TCS are much better. So from my perspective, he can hold further, but TCS could be a good pick from my side.
Got that view, Mahesh. We actually have a WhatsApp query now from Raj from Bangalore. He's holding roughly 2,000 shares of Yes Bank at 23 rupees per share. Let me go across to Vikas first. Vikas, we've seen, the last 3 to 4 years have not been very strong on the fundamental side. Anything that you're seeing on the charts for Yes Bank?
Nothing great so because the stock is just languishing around at this price. On the higher side, it moves near to 21, 22, then again gets back to 17 and a half, 18. So unless until this 21 and a half, 22 brand breakout doesn't come through, we could not witness anything major up move. It was lately, the last month, it has been added into the F&O segment, so it is witnessing some amount of price and volume action, but difficult to make money. Instead, it will switch on to some other private banks like IDFC First or Federal Bank.
All right. I'm afraid with that, we'll have to slip into a short break. There's more lined up on the other side. Please stay tuned to NDTV Profit.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about 3 key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at
Welcome back. You're watching Profit Insights. Now it's day 4 at the Bharat Mobility Global Expo. The Expo services serves as a key platform for companies to launch new products and connect with potential customers. Car makers announce a slew of offerings, especially in the EV space, specifically priced for Indian markets. My colleague Rishabh spoke with the managements of Gensol Engineering, Car Dekho, Map My India on new innovations.
We're at Hero Vida's exhibition right here at the Bharat Mobility Global Expo, and what we are seeing here is the world's first three-wheeler that's convertible to a two-wheeler. Now this is a two-in-one built electric vehicle that is being innovated here by Hero Vida. What we'll also see is that how this process will take place in terms of converting a three-wheeler into a two-wheeler and a two-wheeler into a three-wheeler and vice versa. It's a very interesting challenge here, and as you can see, the three-wheeler component of it is currently going down. The two-wheeler part of it, the scooter, has been set into it, and the wheel has now been locked in. The back wheel of the scooter has been locked in as the front wheel of the three-wheeler. Now there's a button that goes on there. And now the switch is happening currently. The scooter is basically becoming a part of the three-wheeler now, and this is meant for the use cases of those that currently drive tempos and would also like the convenience of a two-wheeler, and would also like a dual-purpose vehicle in that sense. As we can see, the scooter has now been pushed into the three-wheeler, and the transformation into a full-fledged three-wheeler will now be complete. What we are seeing today right next to me is Wave Mobility's EVA. Now why we are here is because EVA is India's first solar electric car. Now you can look at the size of it. It is meant purely for urban commute. It has a very fixed range of up to about 250 kilometers. It can go up to that, but it is meant for very short urban commutes. If you look inside now, we can see it's meant for 2 adults and 1 child as per the company. It is fit with all the features. You can see an information cluster here, you can see the instrument cluster here. It's very, very sleek in that look. It's still in that product engineering phase. It's not rolled out to the markets yet, but what we're seeing here is India's first solar electric car. It comes with a solar rooftop, as we can see now. It comes with a panoramic sunroof as well, so as to one does not feel congested in this. What we're also seeing is that this is priced at about 3.25 lakhs for the base variant, which is the battery operated, which is the battery as a subscription variant. So 3.25, and the highest variant can go up to about 6 lakh rupees as well. It has a range of about 15 to 20 kilometers purely on the solar charge, and the rest can be achieved if one charges the battery. So that brings it to about 30 to 35 kilometers a day, which is perfect for urban commute. Stay tuned for a lot more innovations coming out of the Auto Expo. And I'm here at the stall that is set up by Gensol Engineering EV, and what I am seeing here is Ezio. This is the first sort of reverse strike that we're seeing by the Gensol Engineering Group. And Prateek, tell us more about the rationale behind this vehicle, right? Why this vehicle?
So when we studied the ride-hailing market in India, 70 to 80% of the rides are single occupants. And to make it mass mobility and EV adoption increase, we looked at the market size right now. And the market really requires a product which is easy in the city, is cost effective. So that's what the main thinking behind the product. This product we are launching at Bharat Mobility. This will be in the Bangalore market first in the second half of this year. And this will be about 50% of the price of the next fleet vehicle EV model. and running cost at 40 paise per kilometer. All this combined it becomes 40% saving for the fleet operators. So they can either go for high profitability or they can go for market size increase by adopting this vehicle, launching it at a much lower price point. Pre-COVID, the market was sub 20 rupees a kilometer. Post-COVID, because of various factors, the market is now in Bangalore at least touching 30 rupees a kilometer. But the customers who were using the fleet of vehicles in a large volume still are waiting for, that's why the bike taxi market has really taken off. And this product with air conditioning, with the large storage in the back, gives you that complete package of the car feeling. We also offer partition in between, so customer can have a complete privacy and safety when they are driving solo. Yeah.
Prateek, also talk to us about the bookings, right? It is a B2B product that you're seeing. What sort of bookings do you have and who are these clients?
Yes. So these are major ride-hailing companies in the country, both only EV fleets and other fleets as well. As you know, government policy is pushing all the fleet operators to adopt more and more EVs, but the price of EVs is kind of restricting them. With this price point, we expect that more and more ride-hailing companies will come to us and work with us. We are looking at booking of around 30,000 between this platform and the cargo platform, which we are bringing next year. So the interest has been phenomenal. Being at Bharat Mobility has given us the next level of exposure, and we expect more and more fleet companies to come and talk to us about this.
Awesome. So this was Ezio, Gensol's product that is set to sort of disrupt the ride-hailing market that is usually been dominated by motorbikes so far, given that 70 to 80% of the rides are currently totally driven by one single person, single passenger rides. And this sort of a car will now replace those motorbikes for a more convenient, for a more air-conditioned, and also offer storage. So stay tuned. When I'm at Car Dekho stall with the leaders of Car Dekho, so to say, I'm with Amit Jain and Mayank Jain. Thank you so much, sirs, for taking the time out. Amit, just describe to us what you have on display here. Kya innovations hai yahan pe?
We are largely a tech-focused company and a product-focused company, and we disrupted the market through that only. So here we are taking the next leap with AI. You must have been hearing about AI, ChatGPT. What we have done is we have created the Auto GPT practically of India, ai.cardekho.com, which answers everything like an expert. So when people would come to our site, they would come for a specific query. Does this car have a sunroof? Which variant is better? Which car is better? And that's why they use Car Dekho. But they have to navigate for minutes to find that information, either in spec section or read. What we have done is we have assimilated all knowledge into our brain of LLM, and it's a custom-built LLM that we have come out with, and it answers anything with a very rich visual experience. So let's say if you ask for a sunroof, it will show you sunroof picture along with the variants and prices of the variants.
So across our different platforms, we get about 50 million people visiting us every month on Car Dekho, Bike Dekho, Power Drift, Zig Wheels, Trucks Dekho, Tire Dekho. And so today with our AI solutions, we want to make the connection between customers and dealers even deeper, richer, and faster. How are we doing that? So we are also launching today the first AI voice bot. Now, if you want to actually have a conversation rather than type at a keyboard and figure out which is the right car for you, you can now just dial into a number, speak to an AI voice bot, and the AI voice bot will be able to guide you through your entire car buying journey. And we are training it to be the world's best car salesperson. So that's what we are doing, and we are unveiling those solutions today at Auto Expo. I think the timing is great as well. If you see today at Auto Expo, so many new cars are going to get launched, and so if anyone wants to understand which car will be the right car for them, all they need to do is come to ai.cardekho.com and we'll be able to help them.
Awesome. So a very AI-fueled sort of innovation center here by Car Dekho. Stay tuned for more coverage from Auto Expo. When I'm at the exposition here by Mapple's Map My India. Thanks so much, sir. I'm joined by Rakesh Verma as well as the COO, Sapna. Thank you so much for speaking with us. Firstly, tell us what's on display here. What's the new sort of innovations that Map My India is bringing out this Auto Expo?
Thank you very much. The theme this year is navigating, mobility and intelligent. Basically, it makes the car more intelligent, and there are several parts of it that we are supporting the OEMs And I'll let Sapna describe one after the other and tell you more in detail.
I believe it will be a good idea to take you through the overall stall to explain what we are doing in this space. But broadly speaking, we are an auto technology company, deep tech auto technology company, focused on both maps and location technology. Our core platform for automotive organizations is called NCASE, which is Navigation Connected Autonomous Shared Electric Mobility Platform. And there are a lot of innovation in each of these areas that we have done, which will make the vehicle more intelligent, smarter, and safer. I think that's really the need for the vehicles today, and that's where everybody is talking about. But what MapMyIndia is doing, MapMyIndia is delivering, and we are showcasing a lot of our solutions across this entire booth in different sections. So I would like to take you through that. Is that okay?
We'll do that.
Okay. Yeah.
Mr. Verma, one question. Most of these solutions, would they be B2B or are you also exploring consumer-facing solutions?
So, you know, we are a B2B and a B2B2C company. So when you see this B2B2C, that's consumer only. But it is going, one channel is the automotive OEMs, the other channel is direct, which is our Mappls app. And Mappls app today has becoming more and more popular. In the last few months, we have crossed 30 million mark. So we are very proud of it, and we are bringing in, I can say it a little in advance, that we are beyond the junction view, which makes your car safer at the time of flyover, or our maps help you make sure that you don't land up in sea or water or fall out of the bridges or land up in some unknown, unsecured or insecure places. These are some of the characteristics of the quality of our map data.
Everyone, with Budget 2025 right around the corner, there is one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. Expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the Union Budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000 and since then it has been climbing steadily. Now, economists have a big ask for Budget 2025. Cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand in sectors hit by sluggish consumption. Sounds like a win-win, right? In fact, during a recent pre-budget meeting, experts suggested exactly this to Prime Minister Narendra Modi, arguing that it's time to ease the financial burden on taxpayers while stimulating economic growth. As per an NDTV Profit exclusive, the upcoming union budget could bring significant income tax relief with potential modifications to the new tax regime. Sources suggest the government is considering adjusting personal income tax slabs and reducing tax rates for incomes up to Rs 10 lakh to boost disposable income. The new tax regime, which
Well, it's the first day of the World Economic Forum at Davos, and it's a packed day at NDTV Network and NDTV Profit. So remember, we'll start off with global voices like Florence Morzelin of Dassault Systems and Dr. Peter Coate of Siemens, who will be essentially talking about the AI impact on manufacturing and services businesses, as well as their exposure to India and how is it that they are looking to take it up a notch. We'll of course also be talking about how the world look different in a Trump 2.0 and a Modi 3.0 era as well. We'll pose that question to the Maria Vasalu of Pictet and Gautam Kumbra of McKinsey. And we'll round off the day with conversations with Bharat Forge and Wellspun Group, talking about Trump tariffs possibilities and the impact on some of the exporting businesses in India. Of course, don't forget to tune in for Roshni Nadar's conversation with Vishnu Shom of NDTV as well. It's a packed first day right just before the Trump swearing in begins. So promises to be an exciting day at the World Economic Forum. Back to you.
Biggest leaders, the biggest thinkers. It's an opportunity to reflect on some of the biggest concerns around the world, the biggest opportunities around the world. And who better to start off our World Economic Forum programming than the president of the World Economic Forum, Borger Brender. Thank you very much, Mr. Brender, for being with us. India has a huge presence at the WEF every year. And one of the primary themes, of course, is growth. You would have seen the latest numbers. India just under 7%. But among large nations and growing nations, it is still quite formidable. So how would you look at the India growth story first up?
So India has a great potential, and it is still growing pretty well, maybe 5.5–6% this year. But there is no reason why India cannot pick up again and do 7–8%. Of course, provided that there are reforms when it comes to investments, reforms also in infrastructure, reforms in investing in education and R&D. We do expect that in a few years, India will be 20% of the overall global growth.
Yeah,
that is quite incredible. And what works also for India is the enormous strength in startups. There's more than 120,000 startups in India. I think is more now than 120 unicorns. So that ecosystem, I think, is the basis also for future growth.
India has targeted 2047 to become a developed nation. Do you believe that's realistic? Do you believe it can be achieved?
I think India will be a $10 trillion US dollar economy pretty soon. What also works in the interest of India is that trade is now pivoting more towards digital trade and services. That's growing 3 times faster than traditional goods. And these are areas where India is very strong.
You've come out with lots of fantastic reports in the last couple of weeks. You do this every single year ahead of the World Economic Forum annual general meeting. you deal with the future of employment and jobs. What are some of the key challenges or opportunities that you see with greater digitalization of the workforce?
So it's increased productivity, and productivity is like producing more with less resources. And of course, this will challenge some jobs that are back offices today or other jobs. But if that can lead to people moving into areas where you produce higher up in the value chain, you can pay better, you can produce more, and that's prosperity. So for India, there are, of course, huge opportunities when it comes to the new technologies. But short term, it also creates challenges because one has to upskill and reskill people.
One of the big concerns is, of course, climate. And that's another big agenda this time around. The world isn't really doing very well in trying to stick to that 1.5 degrees centigrade and below that. How is that a primary driver in your thought process at WEF this year?
It's incredibly important. And I think you just came back from Los Angeles. You saw the wildfires.
Absolutely.
We have seen droughts. We know that agriculture production of food is being more challenged now because there are areas there you can just grow what you use to grow. So in general, I would say that the cost of inaction far exceeds the cost of action when it comes to climate change. So we need to keep up the momentum. We will need to emit less CO2 in the years to come to even be able to stick to a 2% degree target. And that, of course, means a lot, especially to those countries that are most vulnerable. And those are often countries that have emitted the least CO2 traditionally, being African countries, but also including India, that already has seen so much heat waves and have seen the cost of this.
Well, it's our first conversation out of the World Economic Forum Davos 2025. It's Monday morning and it's biting cold here. Or maybe, as our guest Florence Verzelim would say, not so cold. But of course, for the uninitiated, Dassault Systems, strong presence in India, Mumbai, Pune, Bengaluru and Chennai. And she, of course, is the Executive Vice President of Industry Marketing and Sustainability of Dassault Systems. And had told us the last time that she loves India. I'm sure the opinion is same this time. But Florence, thank you so much for speaking to us.
And I still love India, of course. Thank you so much for inviting me in Davos.
Yeah, but it's a bit of a perfect storm of sorts to be in Davos, right? I mean, the cooperation in a fragmented world is the Trump swearing-in ceremony today. How do you view the world from your prism currently, Florence?
Well, what I can see is that the world is getting more and more complex, which is weird because at the same time, it's never been so easy to do amazing things, especially with the power of digital twin and AI. But it's getting more complex because a lot of my customers in India, in Asia, are very worried about taxes and like the fact that it's going to be more complex to do a trade with the United States. So really, I feel huge enthusiasm about AI and the power of Gen AI, but at the same time, like worry about how are we going to manage it? Do we need to be more efficient in terms of operation, cost of manufacturing? Do we still need to be investing a lot in innovation? And like there is this kind of weird moment where there's a lot of enthusiasm of what can be done and a bit of fear about the effect of the new US government.
Yeah. So, I mean, let's talk about that for a moment. Donald Trump coming in, very likely tariffs will move up. We don't know the extent, but let's assume they move up a little. That may lead to a year of higher interest rates as opposed to lower interest rates as well. How do you see growth in such a scenario, Florence?
Well, it's a very interesting question. I see growth because, in a way, companies will need to invest a lot in order to keep up with the operational efficiency, to drive costs down, to kind of match the taxes. For example, in India, lots of investment on electric vehicles, especially two-wheelers. I think India is really running the world when it comes to electric two-wheelers. And what is great about India is they're doing that. For example, Simple Energy, who are working with us, by driving all costs down. And in that regard, I think India has really an advantage because they've already always worked on frugal innovation. So compared to other countries that were not in that model, they really are going to get an advantage on it.
Interesting. I mean, the India Forum or the India Pavilion this time around speaks about how 40% of the vehicles in a few years will be totally electric, so on and so forth. So you hit the nail on the head. Just talk to us about how do you see policies in India, one, supporting growth, two, attracting capital into India to become, I mean, for manufacturing in India for India and manufacturing in India for the world.
No, what I think is the most impactful among all the Indian policy to attract investment from everywhere in the world, that's what they've done on skills. I can tell you we've been working with India since 20 years, and the improvement in education skills development is just amazing. Our people in Pune, they're among the smartest we have. They're not only the smartest, but the most innovative and the most enthusiastic. And it's really helping because over the past few years, India has been the country where we have invested the more when it comes to people in R&D, of course for the Indian market, but more importantly for the rest of the world. When it comes to software for EV innovation, but also for marine and offshore, for consumer goods, now for life science. 2 years ago, we opened a life science lab in Pune in order to serve the world. We are making it in India because of the level of education of India. So this is something very smart. And then the other very smart thing is also all the Indian schemes when it comes to cities, digital twin of the cities, sustainability in cities. I think India is the country which is investing the most. And the third one where I'm seeing a lot of impact, it's renewable energy. You know, on Q3, India was a country in the world where there was most investment in renewable energy. Before it was China, now it's India. And this is thanks to an Indian government putting scheme to attract companies, but also putting scheme in order to make sure that the R&D is happening in India with Indian people.
Thank you, Florence, and wishing you a happy 2025 and have a great Davos.
Thank you very much. You too.
Thank you so much, and viewers, thanks for tuning in. Well, at the World Economic Forum in Davos and in conversation with somebody who is, well, in some sense, running a business which gets impacted in multiple ways with the policies taken by various governments, Trump 2.0, Modi 3.0 and more. Priya Agarwal-Hebbar, thank you so much for joining in.
Thank you so much, Neeraj, for having me.
The pleasure is entirely ours. So, okay, let's start off with the conversations at Davos. It's day one, so it's early days as yet, but I'm told that you have packed 4 days. What is a metals giant doing here in Davos in terms of meetings and policies, etc.?
We're talking about Vedanta 2.0 because Vedanta 2.0 is, evolving. It's transforming. We say transforming for good. And Vedanta 2.0 is going to be committed to transition metals, critical minerals, energy, and technology. And Davos is the right place to get really the learnings, the understanding on what's critical, what the globe needs, what the world needs for us to do, and we're really here to support it in our new avatar.
Yeah. Well, so before I talk about Trump 2.0 and those policies, I mean, China has gone out and, for example, spoken about aluminum targets, etc. Right. There's a lot of question mark around what extent of stimulus can they give, which will have a big bearing on metal prices too. Right. What is your internal assessment of what could happen on those counts, and therefore what could happen to metals 2005? Fraught with risk, I know the answer, but still.
So no, frankly, India's in a sweet spot. Critical minerals, transition metals, what everybody is talking about now is not. It's not possible for the energy transition to happen without it. The World Bank suggests we need $1.7 trillion of mining investment just for the energy transition to happen. So the eyes are on the industry, and India is at that sweet spot because while the rest of the world have really done everything, we've not even started exploring what we have.
Right.
We have reserves with so many critical minerals that are necessary. We see that every day, and even in our businesses, Hindustan Zinc, aluminium, and all of the other businesses that we have, the reserves are so large. Hindustan Zinc is working towards 2 million tons, doubling the capacity. Aluminium is working towards doubling its capacity. Oil and gas is working towards doubling its capacity. So it's all there. It's all there domestically, and it's time for us to harness what we have and produce for the world.
So you reckon the existing businesses as they stand right now, which is not necessarily new age commodities, if you will, but the traditional ones, 2025 could be a year which will essentially help? Because 2024 was a mixed one, if you
Right.
will, right? So could 2025 transition into something more positive, which can give you cash flows in order to both, one, service debt, and two, in order to invest for the new age metals?
You know, if you look at our debt situation currently, I think we've reduced our debt by $4.6 billion, and $3.6 billion have been raised globally for Vedanta. The kind of excitement for this sector is huge. This is one of the largest fundraising that's happened globally for an Indian company of late, and we're very, very excited for the future of this commodity. And even the government, the critical mineral blocks that they're aggressively auctioning. We're very, very much out there. We've already auctioned, and we're preferred bidders for 6 of them. We're focusing our energies more and more on these critical minerals, and we want to make sure that we do our best to do what we can domestically to produce and really help and support India in this space where it can shine. It really is China plus one.
How do you see
what the world is
growth
talking about.
what so therefore increasingly appears to be a fragmented world, even as the theme of the WEF seems to be cooperation in a fragmented world?
Well, we have entered a period of what I call Cold War 2.0. It's different than what we have seen in the past with the first Cold War, because now we have effectively two alliances, one around US, the Western Alliance, and one around China, more recently really formed under the BRICS Plus coalition. The difference now is not a competition about political philosophies, but democracy versus socialism, but it's really all about growth and control of technology. And so there are different sources of uncertainty going forward, but also there is less cooperation in matters of security and peace. And that's potentially a very dangerous aspect of this time in our days.
Interesting. So the world, the last 12 to 18 months has been obviously having its mind, one end of its mind focused on the geopolitical conflicts, which hopefully might come to an end, if not in days, then in weeks and months, if Donald Trump is to be believed, right? If that problem ceases, and if the real problem might be, let's say, tariffs, higher rates, counter tariffs, and a polarized world around trade, how big a problem could that be, or is that a solvable problem?
Well, so far, since the Second World War and since the end of the Cold War, we are accustomed to living in a world really underpinned by unfettered free trade, globalization, and peace. These 3 pillars of support are now no longer in place, or they have been challenged. And so I don't think that this is a temporary thing, but it represents more of a regime change in the way the world operates. I don't think that it's something that will end from one day to the other. Certainly we're going to be facing increasing trade barriers, increasing issues with competition around technology, and we have already seen a few hotspots around the world of conflicts. The question is whether Trump will be able to really stop these conflicts, or whether they will shimmer going forward.
Okay. Now let's assume that for a moment, a hypothesis that there is some allaying around the geopolitical fears around the geopolitical side, but there are surprises in Trump 2.0. If indeed tariffs are surprisingly higher, and if they are followed by counter tariffs from all sides, and if that is inflationary in nature, which it likely will be, are we looking at a year wherein interest rates and therefore cost of capital might actually surprise on the upside? And what would that mean for a growth-starved world?
In my mind, tariffs is a tool, is a negotiating tool for Trump. I believe the priorities of the Trump administration are America first, the supremacy of the US dollar, and the dominance of the US in the technology sector. So long as it can achieve these three things, tariffs will not be particularly disruptive. So it's more a matter of negotiation. On the other hand, many of us are accustomed to living in a world of low to zero interest rates that were partly due to the consequences of the financial crisis, but also a high level of financial repression due to monetary policy from around the world. That type of accommodation and QE, as we know, has been reversed. And so the expectation that we will be faced with very low interest rates going forward doesn't necessarily make sense. And we should expect the yield curve to basically rise and have an upward sloping yield curve with some risk premium in the long end.
Thank you, sir, very much for being with us. Great to speak to you once again. When one speaks about artificial intelligence and the agriculture sector and food processing, what is the link?
Artificial intelligence has a big role to play in the food sector. And in Godrej Agrovet, we are using artificial intelligence in several areas. We have a crop protection business where we produce chemicals that help to protect the crops. And to find out about crop diseases, we use photographs and we use artificial intelligence to study the photographs of the crops and determine what kind of disease it is. And that is very useful. In our oil palm business, we take satellite photographs of all our oil palm plantations, which are owned by smallholders, and they don't have the wherewithal to manage the plantations very efficiently. But once we see the photographs, we can give them advice. We can tell them what kind of fertilizer to use. We also do soil testing. All that gets analyzed, and wherever possible, we use artificial intelligence and give them the right advice to improve their yields and the quality of the oil they produce.
And therefore, reducing inputs like fertilizers, reducing costs as well, is that something that improves with the use of technology such as AI?
Absolutely, because once you know the exact conditions of the crop, you don't overuse fertilizers. And overusing fertilizers causes pollution and damages the soil. But if you use the right amount, it's very good.
And you are collaborating with tech firms as well around the world. How is that working?
We do, but we also we have a lot of artificial intelligence professionals in our own organizations as well, and it's working out well. We also use artificial intelligence in our food businesses to manage the stores. We see what is the shelf space share we have by photographs of the stores, which all gets analyzed by artificial intelligence, so it makes all our sales staff very productive.
Today, of course, is a very interesting day with the Trump presidency. And I think from an India standpoint, the issue of tariffs is critical, and obviously critical to agriculture as well.
Yes.
So how do you look at that?
It is going to be a challenge for us. On some items, we have high tariffs. It would be good for us to proactively reduce some of those tariffs. We no longer need such high tariffs for protection of our industries. And already many people are manufacturing, the foreign companies who were importing those products are already manufacturing in India. So by reducing some of these tariffs, we can make sure that we are not hit by high tariffs. And if China is hit by high tariffs, we are likely to benefit.
Sustainability is absolutely key. Sustainable development techniques are critical. It's also very much an agenda this time around. But for you at Godrej Agrovet, how are you incorporating that in your manufacture?
Right. Not only in Godrej Agrovet, but in all our businesses, sustainability is very important. In 2010, we launched our Good and Green program for environmental sustainability as well as social sustainability, and it was working out very well. Subsequently, we had compulsory CSR spends, and we used those to help socially benefit society at large as well as reach our sustainable goals.
We are in conversation with a very important guest, Dr. Peter Kotte. He's the member of the Managing Board, CTO, and Chief Strategy Officer of Siemens. And he joins us right now on the show. Well, we call it Siemens. It could be Siemens, but Dr. Peter, thank you so much for joining us.
Thank you, Neeraj. Thank you for having me.
The pleasure is entirely ours. It's an unenviable position to be in, yours, because you are strategizing for a large global conglomerate at a point of time when global certainty is anything but certain. How do you view the world and growth from your prism?
Absolutely, you're right. It is one of the best jobs you can have because it's all about technology. So Siemens is in the midst of a transformation into a tech powerhouse that brings all the benefits to industry, to, of course, infrastructure and to mobility, trains. And as such, we are working now in an environment that is very, very agile, where you have to revisit your strategy continuously because of geopolitics, because of new technology trends. So every week there's something new, and it's very important to keep to your strategic priorities.
Most certainly. So, what are the leading technologies that Siemens is pursuing, and what's the difference do you think it makes to the world of various verticals that you might be providing the technology?
Right,
to?
right. So for us, the number two, there's two essentially that you're looking at. So for one, of course, there's AI, but there's the industrial AI side of things.
Okay.
Meaning that we use industrial data in order to improve industrial processes, which really makes factory workers more productive, which makes train more safe, which makes buildings more energy efficient, right? So we bring productivity, energy efficiency, knowledge to, of course, the industrial world. This is what we do, number one. And number two is we build digital twins. So think of Davos, and we can build the digital twin of Davos, but we can also bring it, in the digital world and optimize it. We can see how many people go where is energy needed, where's water consumption happening, where's inefficiencies that actually tech can help us to spot and then really make it better. And this is exactly what Siemens does every day.
So this must be a large market for a lot of industries in various parts of the world, including India, I did imagine. What are your thoughts on the acceptance of some of the stuff that you're doing in large markets like India, and of course India specifically as well?
Yeah, so generally speaking, the technology has to serve the people.
Right.
And so therefore it has to be embedded into technology, no matter how you operate a train, how you actually work with a machine, how you manipulate the controllers of a building. It needs to be super simple. So therefore user experience is something that we bring so that people more easily adapt the technologies that we bring. For India specifically, it's an enormous opportunity, because if you think about the many, many people that are not skilled yet today in the Indian economy, if you think about the 60 million small to medium-sized enterprises you have in India, this is a huge opportunity. So we have to bring very simple technology, easy to deploy, easy to plug and play into the existing environments, and then get Indian factories, Indian buildings, that very initial edge that they need.
So I'm guessing some of that work might already be happening in India through you as well, because Siemens has a very large presence in India as we speak over the years. Talk to us a bit about that market and how do you expand there, if you will?
Sure, of course. For us, India is the key growth market. We have more than 24,000 people in India, 2 major innovation hubs. Essentially, every product today that Siemens is shipping is software enabled, and that software has been most likely touched by Indian engineers that do software development. So pretty much India is going through all the offerings that we have at Siemens.
Okay.
But more importantly so, it is a huge growth market. India wants to be, or has the power to become the 3rd largest economy by 2030, wants to increase the manufacturing share from 15 to 25%. And we say that, Siemens needs India for the growth, but India needs Siemens in order to bring the tech that you need to make that leap in productivity and technology.
This January, the world will come together at the World Economic Forum at Davos to bridge differences, because the stakes have never been higher. Collaboration in an intelligent age. In a Trump 2.0 and Modi 3.0 era, this becomes the primary agenda. And the tallest leaders in the business and political world will try and get answers to the most pressing questions. How do we fix a fractured global economy? How do we combat climate change and create a future of opportunity for all? And how does India navigate the opportunities and challenges of 2025? Join me, Neeraj Shah, as we bring all the action from the World Economic Forum for the month of January to your homes, only on NDTV Profit.
I present the budget for a historic
Well, Budget 2025 is around the corner and Macquarie has come out with its budget estimates or expectations on each sector. The first sector is the banking space. They do not expect favorable treatment for deposits and possible capital infusion for PSU banks and insurance companies might take place. Moving on to the next sector, NBFCs is the counter. Credit guarantees similar to SMEs for MFI sector can be
Will Budget 2025 help to accelerate India? I think this question is on top of mind right now, especially in the context of what we've been seeing in terms of turbulence in equity markets. A lot of questions, Neeraj, on where the economy is going, whether India will continue at this hot streak, and which is why our guest today becomes completely apt to talk about how to ride such waves.
Yeah, most certainly. And you know, for somebody who manages such large pools of money, how to navigate a slightly different market environment than what we may have been used to for the last 4 years. Sandeep Tandon with us. Needs no introduction. Sandeep, great having you. Thanks for joining us.
Thanks for calling us.
Sandeep, just before we get to the crux of the matter, which is budget, a broad investing question. The last 4 years, we've seen the classic buy any dip strategy, buoyed by the participation of the Indian retail investor, directly and through mutual funds.
Correct.
Is the template of the market starting 2025 different than what it has been for the last 4?
So I will not say ki starting 2025, for last 6 months I will say something has changed. Okay, we have been very vocal about right from July 2024. We are saying that is a mild risk of environment is emerging, and we were very early to talk about deteriorating macro, earnings cycle and other things happen much later. Okay, since we are predominantly a macro house, we are able to see some of the high frequency data and able to talk about if something has changed. And that's the reason, if you look at our portfolio, we were very quick to move out from high beta to low beta, high illiquid to liquid names, and mid and small towards large and mega large. We were relatively early, and that's the reason we paid a price also in that sense, because market rallied till September or so before the China, that unknown risk came into picture as stimulus when money shifted from large cap also. Okay, since then, I say the mindset or the mood of the market participants has changed a bit. But let's understand that I will like to answer this thing from a longer term, medium term and near term perspective. Okay, from a longer term perspective, something has changed in India, which we quantify through perception analytics. Okay, like whole market talks about earnings, how you can forecast earnings, but we spend a lot of time and energy in forecasting the multiples. Okay, how nobody talks about multiples forecasting. Okay, and with the help of, since we are largely a behavior house, we have built a concept of perception analytics. How you a P multiple, we have a perception analytics. Now there's no absolute logic or absolute terms. Okay, it's a relative game which we play. Okay, on a relative basis, how perception is changing, we can quantify up to certain extent, absolute terms also. But for me, as a student of theory of relativity, relative things are more important than absolute numbers. Absolute numbers are important, but relative is more important. As a combination, we can say India P multiple will remain elevated, or the valuation or the perception analytics can remain elevated for longer term perspective. We have been hearing this debate for last 2 years, right from 2022, people are talking about India is expensive. Okay, India still expensive. Okay, my view is India will remain expensive for a few decades also. That's the way India perception has changed globally. Okay, now that's a very large macro big picture call. If I have to take about till 2047, if I can say with huge amount of confidence, being analytic house, India perception till the time India demographic cycle peaks out in 47, till the time this cycle has potential to remain elevated for longer term perspective. 3 decades, a very longer period I'm talking about. Now, obviously, you can't take a longer term such a call. That's not going to be linear move. So it's within linear moves, you will see downtrends. Now let's talk about from a medium term perspective. Then I will come to the very near term perspective. From a medium term perspective, since we are a student of VLRT framework, we talk about, so look at valuation analytics. Okay, we give 1/3 weightage, remain elevated and it will remain elevated. So now second dimension, if I bring, is about risk appetite. Okay, now again we dissect risk appetite also in the duration. If I'm talking about longer term duration, India's sentiments is very constructive, so it's very constructive. But if I have to look at from a medium term perspective, okay, risk appetite data was deteriorating right from July. Okay, for India in particular, I'm talking about, which was not the case for global markets or the US market in particular, even some other emerging market. In fact, risk appetite for China was one of the lowest in last 5-6 years. It was lower than the COVID period also. Okay, and that's the reason you saw sharp reversal. When you hit those inflection points, market changes. Okay, and it's very quick. Okay, by the time you react, it's up 20%. Okay. And that's the time a lot of people got excited, and again FIs have burned their fingers again in China. In 5 years, they have never made money. This is again a good track record they have built. Again, they didn't make money. Because you are not that swift to capture that 20%. The conviction came after 20-30% up move. Okay, that's something. Because as a student of behavior science, I can tell you whatever number people can talk about fundamental or lot of gyan. But ultimately, 90% people chase prices. It's prices which determines everything. It's a hard fact of life. Whether it's money manager, whether it's wealth manager, whether it's analyst. You look at the peak of the cycle, maximum upgrade comes. At the bottom of the cycle, I'm talking about the best strategists globally and best analysts. Okay, and no comments. And we were also in similar situation. Only difference is that we have changed a bit. Okay, so we also have made same mistakes. Okay, I have no hesitation in accepting. We used to get also same excited in similar manner, which I see now, because we are trying to put process in place. So sometime to assess risk, you have to be ahead of the curve. Okay, after risk has played out, and then you say, oh, that was the risk of environment, but you have lost sizable opportunity.
So were you ahead of this curve? You're talking about the last 6 months. And
yeah, right from July. So I'm coming to that. Yeah. Okay. So India risk appetite situation started on macro. It says risk appetite is coming from the macro data was deteriorating. Now, if you ask me, it has changed significantly. Answer is no. But we could be closer to now a bottoming of that cycle. Okay. Now, some sector, some stock or some data points has already bottomed. Some might bottom out maybe by March quarter or so. Now let's look at the second most important thing. If I have to talk about for a few minutes more on the market, since we're talking about market right now, 2025 will not be about returns. Okay, it will not be about equity market. It will be about how you look at this. This year will be dominated by the currencies, currency volatility and yield. The yields and currency global. I'm not talking about India. So a lot of people say, India depreciated. No, right from September, you look at Korean won or Brazil real or a South African ZAR or any currency. Okay, developed market currency, emerging market currency. Okay, now whether you want to say market has preempted Trump thing, there could be various factors. But right from September, it has changing, and obviously post November, the outcome on 5th November, it has rallied further. So in fact, right from August, September, we were also one house who as a house, we talked about the biggest perceived risk is DXY. If DXY rally, and it was around 101 when we talked about, okay, it's close to 109 or 110, okay. So that risk played out very well. And I can tell you, maybe from a near-term perspective, the possibility it has peaked out, okay? Because some amount of when you can't just one way, it can't go up because rupee has depreciated sharply, and so is the case with thing. Maybe this cycle might peak out with Trump taking oath on 20th, which is not far away, next week only, okay? So maybe one cycle which was expected, sometime, like you buy on rumor and so on news, so people in anticipation have built it, Okay, and on 20th the cycle can reverse from a short-term perspective. Answer is yes. Okay, but the biggest risk is still a DXY. If it breaks and it is moved towards, for various reasons, if I start getting into let's say tariff situation thing, like if I ask me, market is not pricing tariffs across the world. There's only pricing only for China in there. If nobody knows Trump what he can do, okay, but I see he's a businessman, he makes more noise, and then by creating so much hype and noise, and he will settle it. My personal perspective is that in next 3-4 months of his tenure, I think China, some settlement will be worked out.
So President Trump pre-election, President Trump as actually President Trump might be two different pictures. 20th Jan becomes one important date, well put.
Starting point of that.
Starting point. How important is the date of 1st Feb?